Well, greetings and welcome once again. Remember, this is a continuous lesson. We are preparing the notes to the balance sheet. So now we are on trade and other receivables. So this is the format for the trade and other receivables. We have trade debtors, provision for bad debts, net trade debtors, expenses prepaid, income accrued, which is the same as accrued income, and then we have deposit for water and electricity. So let us continue with our activity. Yeah. Okay. They say the first account that is recorded under the trade and other receivables is what? Is the trade debtors, which is the same as debtors control. So let's go and search debtors control and the trade debtors. Okay. And then let's go and check. Okay, there it is. We do have a debtors control. How much is our debtors control here? The debtors control is equal to 20,000. So it's going to be 20,000. So let's go and record the amount here. 20,000. So let's go for provision for bad debt. The following account is provision for bad debt. So let's go for provision for bad debt. Let's go for provision for bad debt. Okay, and by the way, under the provision for bad debt, uh, we start by checking whether do we have any information regarding the provision for bad debt under the adjustment. And then if we do not have, we are going to use the provision for bad debts in the trial balance. On the trial balance is it was 1.4. So okay, if it depends that we did not have the information regarding the provision for bad debt under the adjustment, we are going to use this 1.4. For now, let's go and confirm that don't we have the provision for bad debts under the trial under the adjustments. Okay, they are saying the provision for bad debts adjusted to 5%. So it means we do have the provision for bad debts under the adjustment. We are going to use this one. So okay, so they say we should adjust 5% of our debtors control. So our total amount of debtors control was 20,000. We are going to say multiply by 5%, and then equals to 1,000. So it means our provision for bad debt is 1,000. 1,000. It must be in brackets. So now we are going to calculate the net trade debtors. So we're going to say 20,000 minus 1,000 equals to 19,000. So let's go for the expenses prepaid or prepaid expenses. Remember, prepaid expenses are those expenses that we have paid in advance to we have paid those expenses in advance to go to the business that supply us with those expenses or those incurred expenses. Okay, let's go and check under the adjustments. Okay, first of all, let's start by checking under the trial balance that don't we have any prepaid expenses here? Don't we have under the balance section? We do not have. So if you do not have, we go to the adjustments. Okay, and then they are saying the following amounts are owed at year. No, it can't be prepaid. Interest on fixed deposit does not. Nope. Three quarters. Nope. Okay, let's check. Let's check. Commission owed to the business at year. Okay, let's go and check. Let's go and check. Okay. Okay, I jumped to this one. I did not see it clearly. Okay, the following amounts were prepaid at year end: insurance 400, wages 60. So it means these are the amounts of prepaid. They are telling us that we have this following amount we prepaid at year end. So we have paid in advance. It's for insurance and wages. Okay, let's go and open brackets there. The first amount is how much? Okay, it's 400 for insurance plus 650 for wages. Okay, let's check. Do we still have another prepaid expenses here? No, we do not have. So we're going to close. We're going to say 400 plus 650 equals to 1050. 1050. So then let's go for accrued income accrued, which is receivable. Let's check. Let's start by checking from the trial balance. Do you have income accrued here? No, we do not have. So it means we are going to the adjustments. And then let's check. Okay, this one cannot be. This one says liability. Okay, commission owed to the business at the end. You see, the commission is owed to the business. Remember, commission is when you do something on behalf of others, and then they promise to pay you a money for that particular work you have done. Or maybe, for example, let's say they say whenever you sell this item on behalf of us, you will get a certain percentage on that particular item that has been sold. So that is the commission. Okay, so the commission that they owe to the business is how much? It's 1.4 plus. Let's take another accrued income. Let's take another accrued income. Okay, interest on fixed deposit has not been received. So it means this one is accrued income. It means we have earned the interest, but then we haven't received it. So we must add it. It's an accrued income. It's still coming. So it's going to be plus 300. And then we know that 1.4 plus 300 is equals to 1,700. And then let's check deposit for water and electricity. Do we have the deposit for water and electricity? Advertising, the full amounts are okay. No, we do not have. So it means we can now say 19,000 plus 1,050. Okay, 19,000 plus 1,050 plus 1,700 is equals to 21,000 750. This one is dash. And then we are done. We are done with the trade and other receivables. Thank you.